Hello and welcome to Reason News with me, Alisha Gayapasa Chetty. Buckle up because today we're diving deep into the economic crystal ball to see what 2025 holds for South Africa's major trade and investment partners. And let me tell you, the forecast is a mixed bag. South Africa's economy is deeply intertwined with the global landscape, so the economic health of its key partners has a direct impact on its own prospects. While domestic factors such as load shedding, interest rates, and extreme weather events have a direct impact on the country's economic outlook, so too does the economic health of its trade and investment partners. Let's break down the outlook for some of these major players.
South Africa's economic outlook for 2025 remains cautious, but highlights opportunities in key sectors despite significant challenges. Persistent issues like energy shortages, underdeveloped infrastructure, and slow reforms are anticipated to keep GDP growth modest at around 1.4% annually from 2024 to 2026. However, improvements in electricity reliability and targeted reforms could provide momentum for key industries like mining and manufacturing, which have struggled to rebound fully from pre-pandemic levels. Emerging opportunities include investments in renewable energy projects, agriculture, and logistics, as the country seeks to modernize its economy and address systemic inefficiencies. These areas may appeal to investors seeking long-term growth in South Africa's recovering economy.
Now, China, South Africa's largest trading partner, is projected to see moderate growth in 2025. However, this growth is slower than what we've seen in previous years. Factors like declining exports and ongoing challenges in the property sector are contributing to this slowdown.
South Africa has got a negative trade balance with China, which is quite a huge amount, around about 200 billion rand per year. And that is about 3% of GDP, so it's a huge amount. And how do we turn that around? And I think President Ramaphosa was talking about how to balance the trade. And it's going to take some doing to balance this trade because, as you know, China's economic growth is based on exports. They have got a very small, let's say, consumer base, and that is what the weakness of their economy is, their consumer spending. So they rely a lot on their exports, and they have got trade deficits with very limited countries. So most countries, they've got more exports than imports with them, including South Africa. And there's 200 billion rand. How are we going to change this around? And I think if you look at old style economic policy, mostly we can maybe say export promotion for South Africa, diversification of our exports to China, plus import substitution. And if we talk like that, I don't think China's going to like it much. If we say we're going to reduce this trade balance or trade deficit that we've got. This deficit is a huge leakage in South African economy. It's 3% of the GDP if you look at the numbers. And it's quite a big number. So we need to have huge policy changes with China to achieve this. China has always been interested in Africa, more so than the Western countries like the US. With the US, South Africa has got a trade agreement, a free trade agreement. We don't have it with China. And I've heard the president talking, and also the Minister of Trade and Competition, Minister Tau, he said the last few days that like 100 products from South Africa would be exempted from any tariffs exporting to China. If that is true, and there is a new agreement, a tariff agreement signed in the last few days, that is wonderful news. But we haven't seen the formal confirmation of that. I think we need more transparency to see, okay, what has been signed, what has been agreed to, and then we can say more. But it looks like it is looking good if it's really 100 products that is tariff-free.
Across the Atlantic, the US economy is facing its own set of hurdles. High inflation and rising interest rates are raising concerns about a potential recession. This could dampen demand for South African exports, impacting industries like mining and manufacturing. However, the Department of Trade, Industry and Competition says it's essential that South Africa's economic growth is grounded in manufacturing-led growth and an export-oriented economy that is driven by local municipalities.
The Department of Trade believes a thriving manufacturing sector can play a massive role in the growth of the South African economy. According to Revitalizing SA report, a 10% increase in manufacturing investment is projected to produce a medium-term GDP contribution of 13%. And it's not only manufacturing that will reap the benefits, but the entire ecosystem, positively impacting on unskilled jobs while creating new jobs across different skill levels.
Three things that we provide municipalities, just off the top of mind. We provide them with training and just support on how to design economic policies on the ground. We help them with what we call export passports, so to help them design capabilities for local businesses to get into the export market. But we also have a lot of incentive schemes in the DTIC. It's ones that are run by the department, it's ones that are offered by the National Empowerment Fund, by the Industrial Development Corporation. One of the worst things that happens is that a lot of municipalities are around the country, they don't assist their business people to apply for those incentives and those grants and those loans from these public finance institutions.
A huge gap exists between skills possessed by young people and skills required by the economy. A call has been made to put emphasis on technological innovation and education to bridge the gap, to acquire skills required to deal with challenges such as climate change.
Department of Employment and Labour, we do have programs called LAB. It's a Labour Activation Program. That program is also assist us to train young people, to reskill them, because most of the time you find that we do have skills that are no longer necessary in our society. But now we are saying we want to reskill them to make sure that they fit the demand in the society and in our economy that we are in. So those programs, we believe that can be cascaded to local municipalities.
Another space where young people have been tasked to utilize for manufacturing is within the medical and health space.
South Africans associate health with disease. They don't understand that it's a huge economic operation and a huge entity that has got a lot of opportunities, especially for young people. So we're inviting you to get closer. Start with your general opportunities, but there are those that are highly regulated that require you maybe to partner with higher education institutions or specialized company.
Now, the Eurozone is also grappling with an economic slowdown. The ongoing energy crisis fueled by the conflict in Ukraine continues to weigh heavily on the region. This is likely to affect South Africa's exports to the EU, particularly in sectors like agriculture and automotive. But South Africa is facing a number of challenges, including high unemployment, poverty and inequality. These challenges are exacerbated by the country's reliance on traditional growth models, which are no longer sustainable. To address these challenges, South Africa needs to move towards a more inclusive, sustainable and diversified economy. This means creating an economy that creates jobs for all South Africans, protects the environment and is not reliant on a single industry. The World Economic Forum's annual meeting in Davos, Switzerland, serves as a timely backdrop for this crucial discussion. CNBC Africa brings together a panel of experts to explore the theme of reimagining growth, South Africa's economic transformation.
Now, there has been a sea change in sentiment, particularly from offshore investors. If I think back to, we were in London talking to investors the week before the election results came out. And at that stage, all anyone wanted to know was what's going to happen. Very nervous. We were in London again following our half-year results in November. And first of all, there was a record attendance at the investor conference that we were at. And secondly, a lot of enthusiasm around South Africa's prospects and a general feeling that we're probably in the best position we've been for a decade from a forward-looking perspective. That doesn't mean we don't have our challenges, but I think the mood and the sentiment is very positive. And if we continue to execute on market-friendly policies, I think we'll attract a lot of capital into South Africa.
We were faced with many challenges, even around the the issues that Ian has touched on, the uncertainty regarding, the political environment and what that would, be, what the impact would be as far as policy direction is concerned. But look, I think as a resilient country and a resilient people, we've demonstrated a will and determination, like we always do, to really rise above our challenges. And I think the collaboration between public sector and private sector is one of our strongest, I would say weapon or rather tool that has enabled this country to rise above its challenges, but more so to forge ahead, breaking new grounds, changing the narrative, and showing the real, true reasons to believe in South Africa. So a lot has changed since then, Anastasia, and I really look forward to a WEF now with the new political environment, with the new priorities that are really anchored on ensuring that this country moves forward, because we cannot have a country that we are promoting when we are not delivering on the brand promise. So a huge challenge really lies on our shoulders, but I'm glad that we do have collaborative partners that are always willing and able to show up in platforms such as WEF Davos, because they are quite strategic. And for South Africa to have a voice in those platforms, it is quite critical. As you would recall, when you are out of sight, you are out of mind. And I think that's what precisely we're trying to do, intentionally build a strong nation brand.
South Africa's largest sources of foreign investment, which are the US, UK and Germany, are entering 2025 with mixed fortunes. This requires South African companies to shine their shoes and put their best foot forward to attract or stimulate foreign investment interest that could be less forthcoming than before. Potential investors want South African companies to show, one, a track record of commercial sustainability across the systemic crisis the country has experienced, example, load shedding, transport issues, etc. And two, that they are well positioned to maintain their performance into the future. And three, that they have capabilities that can be exported to other territories. For South African companies, opportunities in Asia are tied into the hunger for commodities to feed, clothes, transport, etc. a combined 2.9 billion people in India and China. Both economies also have a ferocious appetite for commodities that are also used in their massive manufacturing industries, including minerals, metals, and agricultural products. Under the banner of an expanded BRICS grouping, China and India remain the largest prizes for companies in other emerging markets seeking to expand their current footprint. South Africa is a trade-dependent economy. The value of its goods and services trade was equal to 66% of GDP in 2023, compared to a global average of 63%. Globally, international trade has historically been with close neighbors, but globalization since the 1980s reduced the importance of distance. The challenges are real, but so are the opportunities. South Africa has the potential to reimagine its growth trajectory and build a more inclusive, sustainable, and prosperous future for all its citizens. Thank you for joining us on this critical journey of economic transformation. As South Africa charts its course towards a brighter future, Reason News will be there every step of the way, providing you with the insights and analysis you need to stay informed and engaged.